Hello everyone, how are you today? My name is Oriana Brueggemann. I'm a mortgage broker based in Squamish, British Columbia, and I specialize in commercial real estate financing. Today, I want to answer one question that I still receive from many first-time home buyers around down payment and what is the mortgage insurance. So first of all, I want to do the distinction between what we call a conventional mortgage and an insured mortgage. A conventional mortgage means that you have 20% or plus down payment, and then we can amortize the loan up to 30 years, and you are not paying any insurance on this. An insured mortgage means that you are buying with 5% up to 20% down payment, and in that case, we're going to amortize only up to 25 years, and the financial institution you are dealing with is going to be sending your application to a mortgage insurer to insure the mortgage against default, meaning that if for any reason you don't pay, they are not losing, someone else has this default insurance in your product. What happens to that is the insurer is going to charge a premium for the default mortgage insurance. That premium is going to be paid by the borrower. So it's on the benefit of the financial institution paid by the borrower, and it's a percentage of the mortgage loan. So if you have the 5% down payment, the premium of the default insurance is going to be 4%. The more you put down payment, the less the premium is going to be as a percentage. So it's something to take into account. You don't have to come with this amount of money upfront. It's something that is added to your mortgage loan. So something to think of. And many people ask me if they can borrow the down payment. That has two answers. You can do it, but you will need to take two things into consideration. The first one is that this premium that you are charged when the money is not coming from own resources is going to increase. So if you have that 5% down payment from your own resources, the premium insurance is 4%. When you have a difference, or when you are borrowing, the down payment is going to go up from 4% to 4.5%. So one first thing to think of is if this 0.5% extra on the full amount of the loan is worth it to do it right away, or if you prefer to just wait and try to come up with this 5% on your own. And the second thing to have in consideration is that when you borrow the down payment, you will need to do a monthly payment for this money, right? So in the mortgage world, we have the debt ratios that, to summarize, this is a subject for a full video, but just to summarize, is the percentage of your salary that is going to be paying debt, including the mortgage payments. So there is a maximum to what you can put out of your salary for this. And what we have to do, if you are borrowing the down payment, is to account for a monthly payment for the money you are borrowing to use as a down payment. Like if you have a line of credit or a credit card or a car loan or a student loan, we will need to include in the numbers an amount to allow you to monthly pay for both the mortgage and that extra, that money that you borrow for the down payment. So now it's an excellent program. It's an excellent program, but something to take into account when we're thinking about this is that it's going to depend upon your income. As the full percentage will need to be the servicing what we call the two amounts. So in other words, there's a maximum that the lenders allow from your salary to go to debt payment and mortgage payment, and borrow funds payments are going to be accounted there. So sometimes this is just gonna make the numbers explode, and the conclusion may be just to wait and save a little bit more of money. Sometimes it does work. So once again, it's something very personal. There's no one mortgage strategy that is alike for everyone. But there you go. That's the difference between conventional, insured mortgage, not insurance, 30 years, 25 years, premium or no premium. If you are in the process of preparing for your first time home buying process, or if you have more questions about this, make sure you reach out to me or comment below, and it will be my pleasure to guide you. Once again, Oriana Brueggemann, mortgage broker based in Squamish, British Columbia, specializing in commercial real estate financing. Bye-bye.